Hi there, welcome back to Dukascopy TV. I'm Ben Jones. China released their GDP figure earlier today, and with the constant debate of a slowdown surrounding Asia's largest economy, I have Qinwei Wang joining me on the line to analyse the stats. To begin with, Qinwei, I'd like to look at the annual GDP figure. It's actually gone up slightly to 7.5%, above current estimates and targets. Were you expecting any increase, and what does this figure show for the Chinese economy?
Basically, today's data are slightly stronger than we thought, and basically signal that policymakers' fine-tuning policy is working relatively well. The weakness in the real estate sector remains, but it kind of has been offset by the target measures. Those measures have benefited the infrastructure spending and the state sector. Also, the economy has being supported by the recovery of the export because the warming foreign demand. So this should ease the fears of a hard landing by many investors and the cause for more forceful stimulus. But looking ahead, we think the weakness in the real estate sector is going to continue weighing on the rest of the economy, but policymakers should stick to their strategy to just the fine-tuning policy as long as the labor market remain healthy. So we think this year growth should be around 7.3%.
Now, retail sales have been quite positive as well recently, hitting 12.4%, but are still falling short of the figures we saw towards the end of last year. What influence are these figures having on the Chinese economy at the moment?
We are not very worrying about that. In fact, the growth in retail sales has been fairly stable since the beginning of this year. Basically, it suggests that the consumption has been holding up relatively well, although the economy has slowed. At the same time, the labor market remains relatively strong, and the household income growth has continued to outpace the economy. So they should further support consumption in the rest of the year.
And finally, we had foreign direct investment figures released yesterday. What can we take from a further increase, and is this helping China avoid a slowdown?
In general, we don't think China rely much on the foreign direct investment to support investment because China's economy is very big relative to the FDI, and China is as for the country as a whole is the net saver. So it's such the relatively encouraging figures on the FDI suggest that the foreign investors are still relatively optimistic about the medium outlook of China's economy. And so that's kind of the positive sign.
Qinwei, thank you very much for joining me today. That's all from me for now. Thanks for watching, and click back later in the day as Dear McDermott will be taking a look at India. Bye for now.